Hello, good morning or good afternoon. Welcome to another video stream of ES Futures Trading. Okay, hope you had done something here. There was something in the morning, something happening in the morning. Before going to the trade, let's see what the market is doing now, right? Where the market stands right now. The market has value that is overlapping to lower. Value is overlapping to lower. In the morning, the market could or did move value inside, inside Fridays, but now it's overlapping to lower. The more time, the more trading that happens in this area or below this level, for example, the harder there's going to be for the market to push or to move value back inside yesterday's. Okay, I'm not saying that's impossible. I'm saying it's the harder that is going to be. Now, that being said, notice now how it is hard to see. This is kind of like a still picture. It is hard to see here what is happening here at this moment. There's nothing here going on. To begin with, there's nothing here going on. And when the market opened, there was low volume. You know, remember Friday. Friday started very low, very low, very low. There is some change around the 7 period, somewhere up here. Now, and today, it opened very low as well. It increases in second period, third period, fourth period, and notice how volume decreases here, right here, when the market does this rally high. Okay, when that's part of things that you need to be aware of, and on top of that, you have multiple, multiple highs. Multiple blocks here, really high volumes here. You know, this is high volume area. This is from last week. This is high volume from today. Notice the high volume blocks that you have here, 1,000, almost 2,000. And what happened here? I started to use these arrows, in this case to the upside. When I see these volumes and the market moves to the upside, that's why I did to the upside. This one also to the upside. Next thing, higher volume here to the upside, here as well to the upside, and just this one moved to the downside. Notice how the market was trading, or buying big blocks to the upside, right? To the upside, to the upside, to the upside. Finally, there is some selling here. And of course, after that, market just starts going in the opposite direction, But you have to be aware of what's happening here. Now, the potential destination of this trade, when the market do this, and this period closes or takes this low out, that's the end of the rally. That's the end of the rally. And then what's going to happen next? I don't know. This market could take this low out, or it could trade in range, or could go back higher. I don't know. I didn't know what's going to happen. Okay, I was looking at this thing. The buying. I want to show you one trade here. I saw kind of like 2 trades today. I took one. But the first one was the lowest, the one that had the lowest risk, and I'm going to show you just in a moment. Now, but what I was saying is, when the market takes this low out, this is one time framing being ending very early in the morning. This could have been, this rally could have been just, reaction to the overnight inventory. We will see that one as well. And the market continues to go lower. And then you have E here. E takes the high. taking this low out increases the odds that we are going to have a rotational market. Okay. Second thing, and one time frame lower ends, this is a rotational market. Go to the upside, to the downside, the upside, downside. Okay. Now the trade I want to show you. I guess it will help. It will help if if I do a replay now. Let's open a chart here. Okay. I'm going to open the comparator. Okay, I'm going to open the comparator here. Select an instrument. Is loading. This business is fascinating. I really enjoy. I didn't see, once this C took this low out and D took this daily low out, I was out. I don't want to know nothing about this market. That's too much risk. Too much it's a rotational market. Okay. And what I was doing, I was checking. What I was doing, I was checking this thing. Okay. I don't know if you can hear this. I wonder if what. Okay. I wonder if you can hear this.
Or you could do this 10. This could be 100.
Now you're usually holding your deck in the other hand. Your pencil may be in this hand, so you're giving your symbols, but you have your deck or your cards, your trading cards in this hand. So you don't have two hands that go 6 or 7.
Well, I guess I can't hear it. I can't figure out this thing. Oh boy. What I want to show.
And welcome to the ETF Edge portion of Halftime. I'm Bob Pisani. Two of the
Well, the thing is, what we used to have in the stock market, we used to have the beats, the market beat, the New York Stock Exchange, right? You have the New York Stock Exchange, you have the Chicago Exchange, and we used to have a beat here. Now everything is electronic. Okay, now everything is electronic. We don't have this open outcry anymore. You don't have this thing, but this is the movie, right? But this is kind of like how it used to be. Yeah, this is really good. This open outcry has been replaced by a screen, right? But the same outcry, the same noise that the market used to have, now is here in the screen. But how you find that out? Okay, the noiser, the louder the noise is or was, the more volume, the higher the odds of success that your trade, the trade that you were doing. Okay, I mean, the higher the odds that you will have success in your trade you were doing, because if the market was going higher and there was a lot of noise, all the chances were that the market would keep going higher. what happened with the market is going high, and the pit is, the crowd is quiet. There's nothing there, right? But now there's no way for us to know that because there's no pit anymore. But we do have volume here. You have this here. This, what I paid too much attention to this. This is a New York Composite total volume. Okay. This is not the ES. This is the market volume. If I see a market that's going high and has higher volume, chances are that the market is going to keep going higher. But if the market is going higher, it has low volume. What are my odds here? Okay, what are the odds that the market is going to keep going higher? Okay, that is what I try to see with volume. Right, that only thing is what I try to see. Now, let's go back to the market and see what was the thing that I saw today. Okay. By the way, for me, there's nothing today. It's too risky, this market, but I believe that there is good odds that this market can come all the way back to this area here. Just because we are a rotational market, and there's a huge volume area here, right? This is a mechanical day, really low volume. Volume is decreasing here. Now, this is the replay. I'm going to replay. Okay, let's copy and paste this. Copy reference areas and replay. I'm going to replay today at 9:25. Create here. To anyone who's interested, this is Window Trader charting for market profiles. I think this is the best not trading platform, charting platform, because this is not a trading. You need to have your own account, your own broker, somewhere else. They don't provide you with trading. They provide you just the charting. Okay. All right. I got this. This is. And before we go over here, okay, let's check the homework. Remember, you have to do your homework every single day. Every single day. We reviewed this on yesterday. We review the monthly, the weekly, the daily, what happened the previous day. There's a breakout, the 13-month range, no excess in the high. We have the weekly, another, and one starting from a range, no excess on the high, trending line here, support level at 43.30. The upper references are century numbers at 4,500, 4,600. This is a range here. The same reference that is we have in the monthly is same reference of support for the weekly and the daily as well. And the market was just at the center, of the range. Kind of neutral, because what is happening during the week. That's what we saw. Okay, we saw market also. We also saw market profile 4,400 here, no mechanical low at the 4,100 here, exactly the half back. This value is low, is also mechanical. The trade, we had a really crazy day, market getting too long and ended being too short at the end of the week. At the end of the week, very short market. That was it. That was the homework. What do I do in the overnight? I have nothing to do in the overnight. But when I saw when you see where, oh no, this is not. When you see the overnight, right when you open the overnight, you will notice something here. Notice where the selling. Notice this highs, no excess on the high, no excess on the lows. Okay, that's the big movement. But notice where the selling happens here. Where the selling comes from last. That's one thing. More selling. You know, there's a sharp selling here. Another sharp selling here. Where the selling is coming from? Sell. Okay. Finally, there is some selling here that has no reference, just 3 highs here. But notice this: mechanical high, non-excess, mechanical high, triple or 4 or quadruple, almost 4, 1, 2, 3, 4 highs all together, and then a final break that took the previous day low out, and then non-excess on the low, market got too short. There's a rally back to where? Right. You have to be able to notice that. Back to where? Back to last again. Okay? It starts selling from last. Again, the same thing that happened on Sunday, the same thing is happening in the morning as well. Selling from last, selling from sell. But it's a very mechanical selling. And the market opened with a gap. Okay, the market open. Remember, previous day is extremely short here. Inventory here is very short. Overnight inventory is kind of like rebalanced. You will see. If I close this is kind of tricky here. If I close here, you can see most of the trade is below seller, meaning that inventory is short. It is in the process of being rebalanced. Okay, some rebalance happened here, but again it's getting short here, and the market opens right here. Okay, it opening. Oh, come on, what? Oh, what am I doing here? Wait, give me a second. I need to find out what's happening here. Wait. Oh. No, this is not. Okay, the market opens right here. Okay, this is the opening. Notice that we have a gap. What is the gap? This is yesterday's low. Gap here. Remember where it came from. M, the laggard state. This could be very well the laggards of all this break here. Where it came from? Daily holdback. Okay, daily holdback. Very mechanical here. Notice there is non-excess high here, and also another mechanical high here. So we may have a trade here at the opening. I was thinking of this. Okay, this is my thinking. Overnight inventory is short. Friday inventory is also short. We have a gap to the downside. If the market closes the gap, that's a long for me. If the market fails to close the gap, it stops 1 tick, 2 ticks from closing the gap and breaks, that's a short. As soon as the market takes this low out, that's a long, and the stop is just below whatever market low is. It could be down here. That's a stop. That's the stop. All right? That is the stop. And that was it. The next thing, once you have your long here, is monitoring for continuation here. Because what happened is the market closes the gap, which we are going to see right now. Okay, this market could be developing toward this area here right now. Okay, I got it here. I'm going to reduce this. I'm going to start playing. Okay. Oops. paste reference areas. Okay, this is last settle. This is the low. This is previous day low here. This is previous day low. Market is going to open in 3 minutes. I'm going to speed up. I want to play it real time once the market opens here. Okay, that's too fast. That was too fast. But I guess I missed the whole point of doing of the replay here. Okay, the market just closes the gap right away. There's no give back here. And notice, okay, you will start noticing here. Let's play this. Hold on, I'm going to play this on 5, okay? You got your long here. That's the risk you're taking, okay? The risk you're taking is this low. Developing, how the trade develops here. You will see how the market starts buying mechanically here. From last, then it starts buying from half back, then there is a lot of buying coming from seller. The main thing, the whole thing, start coming from seller. And you will see how, you know, when the market had this rally here and starts having this kind of blocks at the top, oh, okay, that's it. Okay, I think this could be it. This could be, because there is something here. There's something happening here. Okay, if you have your stop down here, now it's time to move it up. It's time to take profits. It's time to hedge or trim or whatever. But you got to do something because you see something here. There was good movement here, and it just stalls here. Okay, and you need to start thinking that this could have been just a reaction to the overnight short inventory. Okay, the next thing, if I want to see my trade, the next thing that the market will, the message the market will deliver me and tell me, you know, that I am right. The next thing is that Friday's short inventory will start to be, you know, will start to get covered as well. Otherwise, it's just overnight. Okay, so I am starting to having some risk here. You know, my trade. Okay. I need to keep first. I will need to move my stop. Okay, if I have something here, my stop could be now. Maybe here. Do not have a loss. If you are trading futures, come on, man, you have 10 points there, right? Options are different. That's completely different. Right? The risk is the risk. How you manage the risk, how you trade options is different. It's just different. Right? And something that you will see here. Remember, this is 10 times market speed. Okay, 10 times market speed. By this time, value is still overlapping to lower. Value is lower relative to Friday. Volume, oh my God, 949. Volume, at this moment in time, 2/3 into the first period, okay, you kind of figured out that this was going to be about the same. You could see. Notice where is being bought. Half back, okay? It's half back. Very mechanical buying here. Very mechanical buying here. Going on. But when the market starts buying here, okay, you know, this I can have some problems here. There could be something here. I don't want to lose more here, I don't want to risk. I want to start. I have to do something here. Okay. Now my stops can be here. If seller is taking, I'm just out. Okay, because the risk, if seller is taking, the risk that this low is going to be taken as well is actually high. B starts here. We have some no volume here. Some mechanical buyer from this value, this high value, high volume area from last week. I saw the market being bought from Halbach. Saw the market being bought from Seville. Ooh, look at this. Did you see what happened here? Okay. I have big volume blocks, and what happened with the market? Boom, just have a sparse to the upside. When these big volume blocks appear. Let's keep playing. More. This is increasingly high. These are not just retail or traders like I or like you and I, right? There's some kind of like a different kind of traders here. Bigger ones. Okay. One thing here. But this is hard to see if you don't have market profiles. You will see accumulation volume here. Before this spurs to the upside happened, there was this big volume here. The market has a pullback here to the other side. The market was coming to check this one out more high, actually, at the time. That was a good sign. For your trade here. So now could be time to move your stop down up here. Okay, because I don't want. If the market takes this area, this level, this Halbach or this area out, it would mean that all this volume is already out here. Okay, still nothing clear here. Okay, the market is just, if you got a long, good. All right. The next thing is monitoring for condition. You can see now value is inside Friday's value area. Okay, that's positive. That's a positive sign for your longs. The next thing, how do you monitor for continuation here? Next thing in the upper side, we have POC here. Come on. Can you see this level? Next thing, the market has to take POC. All right. That's the next reference. We don't have nothing else on the upper side. You have POC above that Halbach and the daily Halbach from all. You got to remember those things. You have to. From last week to monitor your trade. Okay. To monitor your trade. Okay. Just keep watching here. Okay. Now I am here, right? Now I got my stop, move my stops high. But I'm not going to let the market, you should not let the market take you out. You have to stop out yourself. And you have to close the position. Half into the second period. Volume is about the same than previous. There I didn't see any difference. Okay. What happens if the market comes back too close to last is also Halbach here. Getting to Halbach, to correct this one, the market will need to come somewhere in this area, which puts the market really close to a Halbach, which is really close to Cedar, which is really close to Friday's low. Can you see how this could trigger a sell-off to the downside? Here. Okay. Notice this now. What happened when the market come all the way up to here? came down all the way up to here. This was before, on Friday, I don't know what day it was, but this was a volume to the upside. Now, it appears here, it's to the downside. I guess I make a mistake here. Because I had this as an upside, but it just stops here and sells. My bad, okay? I have to acknowledge when I'm wrong, okay? Because the market came back out all the way up to here and it sold from this level. No. Remember what happened the first time when this high volume appeared? You got selling, right? But I had this as a buy. It happened so fast that I missed this, but I had this as a buy. Okay, it was selling. The main thing here for me was that this area now is this area is a high volume area. What this high volume area here was, this is now. And the next thing, okay, the next thing I have here is that, okay, this is high value. Let's call it a high value area here. Let's call it high value area here. This area, high volume, not high value, high volume area. Well, why do what I am interested in naming these areas? Because there's a lot of volume here. You know, can you see 10Ks here? There's a lot of volume here. If this market gets away from this area, we can have a liquidation. If the market goes to the upside, we can have a short covering. All the shorts, this area. Remember, there's a lot of shorts here from Friday. There's a lot of shorts from Friday. There's a lot of shorts from the overnight as well. You know, from this overnight, there's a lot of short inventory there. Okay. But something that caught my attention here is when B open, we have this area here. Okay, let's do it another one. Gray, let's call it. This area here, notice how it lacks a volume. But what I am interested in volume is when the market goes higher, the volume, and the market starts coming down and volumes dries, okay, on its way down and then goes back to the upside. That's a good thing to the upside because volume dries when it's going lower. This is not volume drying. It looks like, but the market opened here, somewhere in here, and then goes to the upper side. Okay, there is just no volume here. Remember this area here. Okay, it's open here, boom. There's big volume. There's a sell-off, some pullback somewhere in this area, and it keeps going higher. It never comes back down to here. Testing this area, okay, I would like to see if I am long, I would love to see, the good thing for me would be volume drying here when the market is going lower. I had this, remember, I had this as a high volume levels going to the upside. Okay, good also market is going to go keep going to the upside. That's what I thought. But first, need to take this one, and now I have this one. Okay. This is early in the period. This is early in the first period. My bad. On this period. Okay, this area has been repaired. Technically, but I want to see here, now I want to see the market higher. But what are the odds of market going higher now? Okay, what are the odds of market going higher? This low has already been taken. Technically, this is just same level as this one. Same level as this one. Okay, both are the same. Okay, and you have a last there. Very mechanical. Okay, You got to see this. If you are long, you got to see your trade is getting riskier and riskier. Okay, somewhere in the next 15 minutes, this is when I got short here. Okay, base it, not that the market is very close to last here. This volume has been repaired. Volume is accumulated in the lower side. This has been taken, hardback has been taken. Now, monitoring to your trade. Okay, you got a short. The same thing that I have, the same issue, the same nuance that I have going to the upside here, now I have it to the downside. If this market keeps going lower, what I will have here is not the same formation here on the upper side, not the market going higher and drying, but just starting lower and building volume on the lower side. Notice this formation here, high volume here, the lower side. Same thing that we have here when the market was, I don't know what time was here, before this happened, before this upside happened. The same formation going to the upside, now we have the same formation to the upside. At this moment in time, if you have a long, okay, the market is giving you a lot of time to close your position, to hedge your position, to do something here. Now you're wrong here now. Also, market is going to be rotational at very high here. This low has been taken very early in the session. This was just short covering from the overnight inventory, no more than that. How do I know? Just after the fact. We don't know actually when it's happening. Okay, you wanna, this is this is so good, man. I wanna show what the. Oh boy. But the thing I want to show one of these videos here. What the market is, right? Market is information. You have to be gathering information all the time. There's some nuances. Just watch these videos. This is going to help you. Don't know where it is. If I find a Chrome site, I will put the link up there. Okay, but now the short, the long is over. Okay, if you are not short somewhere here, still, when I went short here, I put my stop up here in this area. Just one tick above this high. I don't wanna yeah. And when the market start coming lower, I have to monitor for continuation here. What can happen here? Okay. Now, did you see the spike to the downside? Do you see how fast this was to the downside? That's a spike, that's a burst, that's a stop being hit. There was a lot of buying. Remember, in this area, the market twice come back to settle, was bought from that area. Bought from halfback here, was bought from seller. Those buyers now are out of the market. Those stops have been hit. Right? If there is something serious to the downside, the market will do some pullback here and continue its way down. What are the odds here that happened? I thought that there were good odds here. Based on what? Based on that this low is exactly Friday's low. Okay? Exactly to the tick. And I thought this market could keep going lower. Okay, I'm willing to take some risk here and wait until market take this low out. But I will be very, very careful in the market because some sign here, that mechanical, the same type of trading that we have to the upside. It's the same type that we have to the downside. Okay. These longs here probably are being liquidated here. I don't want to see reds here. I want to keep watching blues, which will mean there's momentum to the downside. If I got reds here, that would be my trade is getting questionable. The market is questioning my trade. Okay. The first sign I notice here is that this high is just matching this high. Market re-entering this range actually targets this low. Remember when the market re-enters a range? When the market re-enters this range, I start to see this upper side. Okay? Doesn't matter how far it goes, but I'm looking at this side because I also have no excess here. Weak mechanical high here, mechanical high here. Okay? That's what I do. And it happens in all time frames. Okay, this is the intraday. Market re-enter this range, it's targeting this one. Mechanical buy here. Good also, market is going to keep going lower. If the market takes this one, what's my next level to monitor? Okay. Let's see what market does here. Okay. Now it would be a good time here to see, do I want to keep my stop here? Would want to move it here to the high? I was questioning that, okay, at this moment in time. Okay, I want to do that. Now value is still inside. Value is still inside previous day. It's still inside Fridays. Price by there. Notice where the buying is coming from, seller. What time is it? 44, half into the period, okay? And this is the third period. The volume has picked up a little bit, but the market has no direction, so this doesn't matter. The market has no direction when it was going up, now it's going lower. No direction here in the market. Okay. This could be wrong here. I have seen volume coming here. When I see volume coming, this can mean that these shorts here are just taking cover here. They are starting to cover here. I see here. I can see here. So let's move now. Let's move the stop maybe down in this area or this area, just above this range. I don't want the market come back. Getting too close to this high gets too close to half back, and there's a lot of volume here. The market comes back up to here. There's a good, I don't know, that's high risk, increasing the risk of the market going to the upside here. So the stops are here now. What time? 56. Oh, that's good. We are in the lower side of the profile, or the histogram, or the period. I don't like this now. Okay, guys, this is not good here. There's a lot of buying coming from, the same thing that happened here. Seller was being bought. Same thing is happening here now. They are doing the same thing again. Can you see that? Okay, can you see that? I don't know what the market is going to do from here. Okay, I don't know what the market is going to keep going higher or keep going lower. I mean, keep going lower or reverse to the upside here. I don't know, but I see buying coming from seller. Very mechanical buying here. Remember, this is 10 times faster. There's a lot of congestion here now. Oh, okay, this could be good to the downside, but okay, you want to know your trade is getting in troubles, the risk is increasing. Notice this volume here. Okay, just see the volume here. This is no taper on the upper side, high volume on the upper side. What you want to see is the market drying when it's going to the upside and then continues its way to the downside. We don't have that. This is super risky, super risky now. Okay, now I'm considering removing or moving my stops to this area, to half back here. I'll go those. Okay, this is not good. Okay. This low has been taken. 2 ticks. And I have volume here. But what I don't like from this market is the way how this movement has happened. 1, 2, 3, 4. 1, 2, 3, 4. Okay. At this moment in time, volume was irrelevant. Because it was a rotational market. But I didn't like this one. The fact there was a lot of congestion here as well in this area. A lot of congestion, there's a lot of volume here. But I mean, congestion with no volume here. Okay? These areas have a lot of congestion but don't have any volume. Which notice the difference that this one versus or relative to this area here. So here I just, when the market has this, took this low out and comes back inside the range, okay, that's it. That's it. Okay, I don't want to do anything. I don't want to do anything with this market now. Okay. This is a rotational market. Being a rotational market, so this could be the rotation going on now. Okay. Narrow range relative to the previous day, narrow range. Now value is a little bit overlapping to lower. Okay. Very overlapping to lower. Just 1 tick overlapping to lower. If the market keeps building value in this area, value area will go lower. Okay. Now high volume, this one. Okay. I am out at this moment in time. I don't want to do anything. Now, something else here. What happened to the market when the market got this here? Did you see what happened? The market got this volume here. Market went to the upside. I mean, it has a just enough volume to take this one. Actually, what happened here? The market went high here. Pick up volume and then took this loss out and then bounced it back here. The first reaction was to the upside. Now I want to see this volume being taken. If I want to monitor for continuation, which I'm not because I am really out, taking this level out would be a good sign and continues to go into the downside. But I didn't like the odds here. Being a rotational market, high congestion areas, and especially the lack of taper on the upper side here. This high has good also been taken out. Or the market coming back to repair this high. Okay. And when the market comes back and repair this high, it can very well come back down, but it can attract momentum buyers here in this area. And now look at the profile. We are inside value area, taking this one, taking this level out, puts the market at the center of the range, very close to make this POC wider here. That has been. Did you see what happened here? Okay. When the market took this high, what happened here? High volume here, boom, burst to the upside. Did you see that? Okay. The market went to the upside here, and then continues its way down. I'm not saying nothing. I'm not saying this, when this happens, do that. Okay? And this is just an observation. All right? Because trying to enclose a market in a formula, or trying to do setups, for example, okay, to do setups, that's not the case. Notice how thick this area is, okay? How thick this area is. High volume here, high volume up here. Market's going higher, high volume here, dries here, but very thin here. Very thin here in what happens to be a high volume area from the past. Okay, now it's opening here. Man, the low side is gone now. The trade to the downside. If you're not out, yeah, I don't know why you're waiting here. The action now is to the upside. The movement is to the upside now. In the short term, in the very short term, this is a rotational market. We have identified this as a rotational market. In a downside market, you know, the medium time frame is going to the downside, but the inventory is very short. Very short. Inventory is very short here. What time is it? 11:38. This is 1, 2, 3, 4, 5. This is the fifth period. 1, 2, 3, 4, 5. And this is another nuance here in the market. Notice what's happening here. When this period ends, volume just dies here. You know, just the market. This is the market, okay? This is the noise the market is doing. You know, if there was an open outcry pit here, this market will be dead silence. You know, nothing going on. And the market moving most of the other side is just sounded in the crowd is silence now. There's silence here. There's nothing going on. This is something to replace that you can use to replace or to monitor the movement of the market. It's not perfect, okay, but there's something. Okay, it is something here. I want to see if I can. Okay, this is the video I want to show you. Okay, you can check this video. You know, this is. He's talking about. I guess these guys are from Citibank, and they're. What is the foreign exchange market? They're a participant in foreign exchange, buying foreign currencies against the dollar. But what they talk is, what they value the most is information. And the information that you have in 1 second can be totally different than you had 2 seconds ago. And you got to adapt, you have to adjust. You have profits, take your profits, hedge, do something. Don't wait till the market comes back and take your profits away from you. Put things in context. They did not know. They didn't know what happened before. I mean, in this specific case, because there's not a pit, right? But you listen to what these guys have to say. It's very interesting, okay, to put things in context. When you put things in context, okay? This market just dries here. It goes dead silent here in this area. When the market comes up here, it just, in this period, boom, just dries. Okay, I didn't want to know nothing. Okay, I said this is it. This is not a market. This is not a market that's going to give us too many opportunities. Okay, it just dies here. Dries here, and then there's some liquidation here. I'm not part. I don't want to be part of this market. I just don't. Okay. Again, when the market is being bought, previous low, the market doesn't get. This could be, what this can be. Buyers again. Remember, we have these things from B period. Right? This big area here, big volume here, volume going to the upside, volume going to the upside, volume going to the upside. From these are different kind of trades. Could they be buying or could they be covering? I don't know. They can be taking profits, they can be getting out. But if I can see these ones, this volume here, everybody can see that as well. So I don't have nothing here. Right? The market is at the center of the profile, a center range, high odds chops, high odds of being rotational. Remember from the opening when the market took this low out, when the market took this high out. And look at the amount of congestion here. Very mechanical trading here. This is volume being accumulated here. In the intraday, and if you take you see a bigger picture here, what you will see is a 3-day range. 1, 2, 3-day range. Inside, you have a 18-day range here, and another range is being formed at the center of the range. This is balance inside balance. The market is in balance now. It was out of balance when it opened. It came out, it came back inside, closed the gap. It didn't get out of balance. It gave you a good opportunity here. This was one of the times. Okay, remember, context is everything here. Context is everything. Okay, you will see other times when the market opens with a gap, closes the gap. But the context today is very different. You can remember the context. What do we have today? We don't have events today. The market's coming very short from last week. We have PPI, CPI on Wednesday, PPI on Thursday. I don't know what other numbers. We have a beige book tomorrow or Wednesday. I don't know, one of these days. Okay. I missed this. What was that? This is upside volume as well. Yeah, I have recorded as an upside volume. The market has taken this low out, the daily low. Is this going to? If there is something serious to the downside, the market will start forming a second distribution here. Meaning that G, the next period, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6. Look at the volume. Okay. G will start trading somewhere in here and keep going lower. Building value here to the downside. Let's see if that happens. Is this excess? Remember, upside, upside, upside. Big volumes to the upside. And you will see this quite often. Okay? There's big volume blocks that are in bought or sold, the market retraces, and just after you think the market is going in the opposite direction, boom, the market comes back and makes new highs or makes new lows. Daily lows and new daily lows, new daily highs. Intraday highs, intraday. Okay? The market is back inside range, values overlapping to lower. It's a rotational market. Is this the beginning of new rotation? Market open here. The same phenomena that we have here. I didn't remember. I didn't like this high. I mean, the way how this, it didn't dry here. It just, boom, breaks from here. It didn't find buyers here. It just, boom, just sell. If there's something to the downside, the market will dry here, but notice this. Market has re-entered this range. Previous day range again. Market has re-entered today's range. This could be very well access to the downside. Super hyper congested market, very mechanical. I don't want to do nothing. I don't want to do anything with this market. No. That's my opinion. I didn't want to do nothing to here. This could be the potential destination. Because there's a lot of volume here. And traders do what works and it doesn't work anymore. We had same thing happening on Friday. We have high volume here, and then just the market just has a gigantic break that has retraced the whole range. The market did that today, retraced the range, but notice there's only two periods here. This is a half of the session here. There's a way more inventory here than there is here. If there is something serious to the downside, new selling needs to come here. Because the long inventory here has been exhausted. These longs here, if there's any longs, do you see this burst, the burst that the market has, the spike that has to the downside? That could be very well short covered here. Remove that, remove this. This is to the upside. This was to the upside as well. Where is selling coming from? Okay, if buying was coming from seller, now selling is coming from sell. And I don't like. And how close is to half back? All right. Potential destination of today's trade. This area here. Oh, you notice. Oh, come on. Come on. The high selling. Gosh. Can this be coincidence? No, I don't. Markets are irrational. The thing is that it is predictable irrationality in the market. What happened with this area from the past here? This area is being traded actually. The market stops here, sells from here, sells again from here. I can't avoid to notice that. But the more the market trade through these levels or references, the less weight it has. Okay, these are already been traded 1, 2, 3, 4 times. To just today, let's not talk about these days here. And I didn't remove this level yet because it was just too close. Right? This low was just too close to this area. Price low was just they can still be there. The market now has traded like 10 points below this area. There could be, I still can be there. Notice how mechanical this high is. Very mechanical high here. Now very short-term trading going on here. Now, value is to the downside now. Why I would like to be along here? If the market is going to the downside, the value is lower. I don't want, POC is way down here. I don't want to be long here. Market can come all the way up to here, but there's no reason for me to be long here. There's a lot of congestion here, a lot of congestion. or time 105. This high is no good. This high is no good. Still no good. Double high here. Remember, I don't want to do anything with this market. I don't want to be long, don't want to be short. It's at the center of the range, inside. You know, being this market is going to the downside because value is lower. But the high is questionable. This high is questionable here. This high is also, I would question this high very close to this half back here and close to, you know, matching highs here. But, you know, not that I do a science of this. I don't want to do a science of this. This is more like an art here. Well, what was good today, you know, may be relevant tomorrow. The way how you do one thing today is the main thing is now we are 2, 4, 6, 8, 1, 2, 3, 4, 5, 6, 7, 8. Notice how volume decreases here. This is this is going to be lower than yesterday. There's nothing going on in this market. This is just short-term traders speaking each other's pockets here. Two highs, questionable high. 22. Two tilts into the period. It has a good low. No, questionable low. It dries though. It dries, but questionable because it's so close to halfback. So close to halfback. You see the market can take this area out. Okay, the only difference of this reference here is that this is the only one that has volume. Okay, not just has big volume, big blocks, but has volume overall. There's a lot of volume here. Okay, so there is something here. If the market can take this area out, the shorts here can be squeezed to the upside, because remember, we have a lot of short inventory from Friday. Nice momentum here. This high has been taken out technically, you know, 2 ticks out. Notice this thing. Okay, there's no volume here. All right, no volume here, so there is nothing here. The market should have no problem going through this area here because there's nothing here. What it does. Okay, and this is it. No, come on. Look at this again. The market stopping on this volume, volume area from Thursday, I believe. Being bought from this area here. But you know why I would be long in the market that is going to the downside. Value is overlapping to lower. There's no taper here. Notice there's no taper here. The market hasn't ended here. There's mechanical buy here. If the market corrects this taper, it can take this low out. There's stops below these lows. There's some buying that can be triggered when the market hits half back, but also it's very close to half too. It's going to be very weak buying. And to repel this buying here, the market needs to come down here, which puts the market at half back. To repel this, come down to here, which puts the market close to seller. To repel that, somewhere in here, puts the market back again at Friday's low. I mean, nothing. Here. Okay, I'm going to close this. Now, okay, I wanna go back and check my market profile here. Check my market profile. I have this area, volume area remains. I have a new one here. In here, you know, from where? And this is wider. This is a wider volume here. From 43, 40, 43 to 45. 43 to 45. And here in the upper side, we saw that this was down, it was going down here, and here it was going up. I put this here because I will forget in 15 minutes, I will forget about this. I'm going to save it. Okay. Name this next thing we may have here. We better have the low. I don't know. This is the low. Is this the high? I don't know. So far it is. The next volume is the 43, the 403. This is kind of questionable, very questionable low here. Very questionable low here. Marcus has to take this one. The market didn't challenge this area here, this value area, this high volume area here. It just didn't. On 35, I have, what? Oh, this was settled, right? I resettled. Yesterday settled. What is yesterday settled? Oh, Friday, my bad. 44.34. Volume to the upside there. 44.30. Also volume to the upside. What? Here? Oh, come on. It's 27 to the downside. I have it wrong here. And 30 is to the upside. Why I'm doing this? This is just to see the intraday, okay? I am moving from these levels. I notice that these blue levels, they used to be what are arrows to the downside now. They used to be. I used to have it as a blue, and the green arrows to the upside, they used to be kind of like light green, something like that. But this is just too. Because I have too much lines. I don't know. It's kind of confusing here. I just want to know. No. This is to the downside. This level here, high volume was held back here. overnight holdback. And it is from this day. Okay. We have the overnight. We have 2 days. This could be very well removed. And because I are intraday references, I will keep it until they are being traded over. From Friday, I still have this, what could be very well the laggard stage of Friday's liquidation. Okay, the market is trading here in this area. I still consider this very mechanical. This area this questionable to me. Overall, remember, overall, 3-day range inside the bigger range. This is a balance inside balance. Settle here, last here. Where the market is right now? The market is right where it closed on Friday. It didn't do anything today. Can you see? This is where it closed on Saturday. This is the seller. This is the regular trading hours, and this is market close. This is just right there. Okay, nothing here, nothing going on. Okay, be very careful here. There's nothing. There's a lot of congestion here, but you will never know when something's going to happen. Okay, the uncertainty is part of the business here, and the job is to be present as well. Just by being present in the market, you will be ahead of most people out there, because most people just comes into the market at the opening, 2:30, 12 is lunch, it's not worth to be, everybody's lunching, nothing is happening in the market, this is just nonsense statements. We just have to be present in the market. If this is your business, if this is your job, you have to be present. Just like any other job, like any other business, you cannot do remote working. Okay. Unless there's any question, that's it for today. I will wish you a good rest of the day, of the trading day. Stay safe out there. See you tomorrow. Bye-bye.